If you're stacking silver right now, you need to stop what you're doing and pay attention to what I'm about to share with you. Because what's happening in the silver market at this very moment is something most people won't see coming until it's too late. And by then, the opportunity will have already passed them by. Let me paint you a picture of what's really going on behind the scenes. While everyone's been distracted by headlines and noise, something extraordinary has been building in the precious metals market. Silver just crossed a threshold that hasn't been seen in decades. We're talking about price levels that seemed impossible just months ago. And here's what nobody's telling you. This isn't the top. This is just the beginning of something much bigger. Think about this for a second. When was the last time you saw silver move like this? When was the last time institutional money poured into physical silver at this pace? The answer is never. Not in modern history. What we're witnessing right now is a fundamental shift in how the world views silver, and most retail investors are completely missing it. Let me show you exactly what I mean. Right now, silver is trading at levels that would have seemed like fantasy talk a year ago. But here's the thing that should really get your attention: the gold to silver ratio. This is the number that tells you how many ounces of silver it takes to buy 1 ounce of gold. And right now, that ratio is telling us a story that's absolutely critical to understand. Historically, when this ratio gets compressed, when silver starts catching up to gold, it signals something massive is happening in the market. We've seen this pattern before. In the late 70s, silver went from under $5 to over $50 in less than 2 years. In 2011, it tripled in value in just 18 months, and every single time it started with the same signals we're seeing right now. But here's where it gets really interesting. The industrial demand for silver has exploded in ways that most people don't fully comprehend. We're not just talking about jewelry and coins anymore. Silver is absolutely critical to the green energy revolution. Every solar panel requires silver. Every electric vehicle uses significantly more silver than traditional cars. The electronics in your phone, your computer, your smart home devices, they all need silver. And here's the kicker: there's no substitute that works as well. Now, let me tell you about something that happened recently that should send chills down your spine if you understand what it means. Major mining companies have started reporting something alarming. Their silver production is declining. Not because they want it to, but because the easy silver has already been mined. The ore grades are getting lower, the costs are going up, and at the same time, demand is skyrocketing. Do you see the problem here? We have declining supply meeting explosive demand. This is economics 101, but on a scale that could reshape the entire precious metals market. And the smart money knows it. That's why you're seeing institutional buyers quietly accumulating physical silver at a pace we've never seen before. Let me share something with you that most people don't know. There's a free guide I put together that breaks down the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's in the description below. This guide shows you exactly what's happening in the precious metals market and how everyday Americans are positioning themselves for what's coming. Grab it while it's still available. Now back to what's really happening in the silver market. Let's talk about the COMEX for a minute. This is where the paper silver market operates. And here's something fascinating. The amount of paper silver being traded dwarfs the amount of physical silver that actually exists. We're talking about a ratio of hundreds to 1 in some estimates. Think about what that means. For every ounce of physical silver, there are hundreds of paper claims on that same ounce. What happens when people start demanding physical delivery instead of just trading paper contracts? We've already seen glimpses of this. There have been moments when the COMEX struggled to meet delivery demands, when premiums on physical silver spiked because there simply wasn't enough metal to go around. And each time that happens, it exposes the fragility of this entire system. Here's a story that illustrates this perfectly. A few years back, there was a massive squeeze in the silver market. Retail investors coordinated to buy physical silver and take delivery. What happened? Premiums exploded. Dealers ran out of inventory. The COMEX had to scramble. And silver prices shot up dramatically in a very short period of time. Now imagine that happening again, but with institutional money involved, with countries involved, with central banks involved. Because that's exactly what's starting to happen. Central banks around the world have been net buyers of gold for years now. Everyone knows that. But what people are missing is the shift that's happening with silver. Countries are starting to recognize that silver isn't just a precious metal. It's a strategic industrial metal that's absolutely critical to their economic and technological future. Let me tell you about what's happening in China. They've been stockpiling silver for years, not just buying it on the open market, but actually restricting exports of their own silver production. They're keeping it in country. Why would they do that? Because they understand something that most Western investors are just starting to figure out. Silver is going to be absolutely critical to the technologies of the future, and whoever controls the silver supply is going to have enormous leverage. India is another fascinating case study. They've always had a cultural affinity for precious metals, but their silver imports have been reaching record levels. We're talking about hundreds of millions of ounces being absorbed by Indian demand alone. And this isn't just jewelry. This is industrial demand. This is investment demand. This is people who understand that their currency is being devalued and they need to protect their wealth. Now let's talk about something that should really concern you. The dollar. I know, you've heard this before, but hear me out. What's happening right now is different. We're seeing countries actively working to reduce their dependence on the dollar. The BRICS nations are developing alternative payment systems. Trade agreements are being denominated in local currencies. And every time that happens, it puts pressure on the dollar's status as the world's reserve currency. What does this have to do with silver? Everything. Because when confidence in fiat currencies erodes, people flee to hard assets. They flee to things that can't be printed, things that have intrinsic value, things like gold and silver. And here's the thing. Silver is more accessible than gold for the average person. It's the people's money. It's what everyday folks can actually afford to accumulate in meaningful quantities. Let me paint you a scenario. Imagine you're a retiree. You've worked your whole life. You've saved diligently. You've got your retirement accounts set up, but you're watching inflation eat away at your purchasing power. You're seeing your grocery bills go up, your energy costs go up, your healthcare costs go up, and you're wondering how you're going to make your retirement savings last. This is the reality for millions of Americans right now, and it's why so many of them are looking at precious metals as a way to preserve their wealth, not to get rich quick, not to speculate, but to protect what they've already earned from being eroded by inflation and currency devaluation. Here's something else that's happening that you need to understand. The relationship between silver and gold is changing. For decades, silver was seen as gold's little brother. It moved in gold's shadow. But something's shifting. Silver is starting to outperform gold on a percentage basis. It's showing more volatility, yes, but also more upside potential. And that's attracting a different kind of investor. Think about the leverage that silver offers. When gold moves up 10%, silver often moves up 15 or 20%. When precious metals are in a bull market, silver amplifies those gains. It's like gold on steroids. And right now, we're in the early stages of what could be a massive bull market in precious metals. Let me tell you about the supply side of this equation, because it's absolutely critical. Silver mining is not like gold mining. Most silver doesn't come from primary silver mines. It comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver supply is largely dependent on the economics of mining these other metals. If copper prices drop, copper mines shut down, and silver supply drops with it. And here's the problem. We're not finding new silver deposits at the rate we're consuming existing ones. The major silver discoveries happened decades ago. The mines that are producing today are getting older. The ore grades are declining, and it takes years, sometimes decades, to bring a new mine into production, even if you do find a significant deposit. Meanwhile, demand is going in the opposite direction. Solar panel installations are breaking records every year. Electric vehicle production is ramping up globally. 5G infrastructure requires silver. The Internet of Things requires silver. Every technological advancement seems to require more silver, not less. And this demand is not discretionary. You can't build a solar panel without silver. You can't manufacture certain electronics without silver. This is structural demand that's not going away. Now, let me talk about something that's really important, especially if you're thinking about your retirement security. If you're sitting on retirement savings of $100,000 or more, you need to understand how gold IRAs work. I put together a comprehensive guide that explains exactly how you can get physical gold into your retirement account without triggering tax penalties. It's in the description below. This isn't about speculation. This is about protecting what you've worked your entire life to build. With everything happening in the markets right now, with the geopolitical tensions, with the currency concerns, with the potential for market corrections, having a portion of your retirement in physical precious metals could be one of the smartest moves you make. Check out that guide. It could be worth a lot more than the few minutes it takes to read it. Let me get back to what's happening in the market right now. There's a phenomenon happening that's absolutely fascinating if you understand market mechanics. It's called backwardation. This is when the spot price of silver is higher than the futures price. In normal markets, futures prices are higher than spot prices because of carrying costs and time value. But when backwardation happens, it signals that there's a shortage of physical metal right now, today, and people are willing to pay a premium to get it immediately rather than wait for future delivery. We've been seeing episodes of backwardation in the silver market, and each time it happens, it's a red flag that the physical market is tight, that there's more demand for actual metal than there is supply available. And when that pressure builds up enough, prices have to adjust. They have to move higher to ration the available supply and incentivize more production. Here's another piece of the puzzle that most people miss. The silver market is tiny compared to other financial markets. The entire annual silver market is measured in the tens of billions of dollars. Compare that to the stock market, which is measured in the tens of trillions. Compare it to the bond market. Compare it to the real estate market. Silver is a tiny market. And that means it doesn't take much money flowing in to move the price significantly. What happens when institutional investors start allocating even a small percentage of their portfolios to silver? What happens when sovereign wealth funds decide they need silver exposure? What happens when pension funds start looking at precious metals as a hedge against currency risk? The answer is prices move, and they move fast, because there simply isn't enough physical silver available to absorb that kind of demand without significant price appreciation. Let me tell you about what happened in the late 70s and early 80s. Silver went from around $4 an ounce to over $50 an ounce in less than 2 years. People who understood what was happening and positioned themselves early made fortunes. But here's the thing. That move was driven primarily by two wealthy investors trying to corner the market. Imagine what could happen now with legitimate industrial demand, investment demand, and geopolitical factors all pushing in the same direction. Or look at what happened in 2011. Silver tripled in value in about 18 months. It went from around $15 to over $48. And that move was driven by concerns about the financial system after the 2008 crisis, by quantitative easing, by currency devaluation fears. Sound familiar? Because we're seeing all of those same factors today, but amplified. Here's what's different this time, though. In 2011, the industrial demand for silver was a fraction of what it is today. Solar panels were a niche market. Electric vehicles barely existed. 5G wasn't even a concept. The Internet of Things was science fiction. All of that has changed. The industrial demand for silver today is structural and growing. It's not going away. And that puts a floor under silver prices that didn't exist in previous bull markets. Let me talk about the mining companies for a minute, because they're telling us something important. The major silver miners are struggling to increase production. They're spending more money on exploration and development, but they're not finding enough new deposits to offset the depletion of existing mines. And the deposits they are finding are lower grade, more expensive to extract, and take longer to bring into production. What does this mean? It means that even if silver prices go significantly higher, it's going to take years for supply to respond. There's a lag time built into the mining industry. You can't just flip a switch and produce more silver. You have to find it, permit it, finance it, build the infrastructure, and then start mining. That process takes 5 to 10 years minimum for a major project. Meanwhile, demand is growing right now. Not in 5 years, not in 10 years, right now. And that mismatch between the timeline for supply response and the immediacy of demand growth is what creates explosive price moves in commodity markets. Here's something else that's happening that you need to understand. The paper silver market and the physical silver market are starting to diverge. There have been times recently when you could buy paper silver at one price, but if you wanted to take physical delivery, you had to pay a significant premium. That premium is telling you something. It's telling you that paper promises and physical metal are not the same thing. And in a crisis, that distinction becomes critically important. Think about what happened during the pandemic. There was a moment when you literally could not buy physical silver at any price in many markets. Dealers were sold out. Mints couldn't keep up with demand. Premiums went through the roof, and yet the paper price of silver barely moved. That disconnect showed you the fragility of the paper market and the reality of physical scarcity. Now imagine that happening again, but in a more sustained way. Imagine a scenario where industrial users start competing with investors for physical silver, where countries start stockpiling, where the COMEX struggles to meet delivery demands, where the paper market loses credibility and everyone wants physical metal. What do you think happens to prices in that scenario? Let me tell you about the solar industry specifically, because it's a perfect example of the demand dynamics at play. Every solar panel requires silver for the electrical contacts. There's no economically viable substitute that performs as well, and solar installations are growing exponentially. Countries around the world have committed to massive increases in renewable energy. That means massive increases in silver demand that's locked in for decades to come. The electric vehicle industry is another huge demand driver. EVs use significantly more silver than traditional internal combustion vehicles. We're talking about double or triple the amount of silver per vehicle. And global EV production is ramping up dramatically. Every major automaker has committed to electrifying their fleet. That's not speculation. That's locked-in demand that's going to hit the silver market year after year. Then you have 5G infrastructure. The rollout of 5G networks requires enormous amounts of silver. Every cell tower, every antenna, every piece of equipment uses silver. And this is a global build-out that's going to take years to complete. More locked-in demand that's not going away. Add to that the Internet of Things. Billions of connected devices, all requiring silver in their circuitry. Smart homes, smart cities, industrial automation, all of it requires silver. This is the technological future we're building, and it's incredibly silver intensive. Here's the question you need to ask yourself. Where is all this silver going to come from? We've already established that mining production is struggling to grow. We've already established that above-ground inventories are declining. We've already established that demand is exploding. So where does the silver come from? The answer is, prices have to rise. That's how markets work. When you have a supply-demand imbalance, prices adjust to ration the available supply and incentivize new production. And in the case of silver, because of the long lead times in mining, prices might have to rise significantly to bring enough new supply online to meet demand. Let me talk about the investment demand side of this equation. Right now, we're seeing a generational shift in how people think about money and wealth preservation. Younger investors who grew up during the financial crisis have a deep distrust of the traditional financial system. They've seen bank bailouts, they've seen currency devaluation, they've seen wealth inequality explode, and they're looking for alternatives. Some of them have gone into cryptocurrencies, but many are also discovering precious metals. They're realizing that silver is tangible, it's real, it can't be hacked, it can't be printed, and it has thousands of years of history as money, and they're accumulating it. Not in huge amounts individually, but collectively, this represents a significant new source of demand. Then you have the traditional investors, the retirees, the people who remember what happened in the 70s. They're looking at the current economic situation and seeing uncomfortable parallels. They're seeing government debt at levels that seem unsustainable. They're seeing central banks creating money at unprecedented rates. They're seeing inflation eating away at their purchasing power. And they're remembering that precious metals protected wealth during similar periods in the past. Here's something that should really get your attention. The ratio of paper silver to physical silver in the market is estimated to be somewhere between 100 to 1 and 500 to 1, depending on who you ask. Think about what that means. For every ounce of physical silver that exists, there are hundreds of paper claims on that silver. This works fine as long as everyone's happy trading paper. But what happens when people start demanding physical delivery? We've seen glimpses of this. There have been moments when the COMEX had to scramble to meet delivery demands, when they had to incentivize people to take cash settlement instead of physical metal, when they had to change the rules to prevent a default. Each time that happens, it exposes the vulnerability of the paper market and the scarcity of physical metal. Now let me bring this all together and show you why this matters for you right now. We're at a unique moment in history where multiple powerful forces are converging on the silver market. You have explosive industrial demand that's structural and growing. You have investment demand from people seeking to protect their wealth. You have supply constraints that can't be easily resolved. You have geopolitical tensions that are driving countries to stockpile strategic metals. And you have a paper market that's increasingly disconnected from physical reality. When all of these forces align, you get explosive price moves. You get the kind of moves we saw in the 70s, the kind of moves we saw in 2011, but potentially bigger because the fundamentals are stronger now than they were then. The industrial demand is real and growing. The supply constraints are real and worsening. The geopolitical factors are real and intensifying. Here's what you need to understand. If you're stacking silver, you're not just buying a shiny metal. You're positioning yourself ahead of a massive shift in the global economy. You're protecting your wealth from currency devaluation. You're gaining exposure to the technologies of the future. You're holding something that has intrinsic value and can't be printed or manipulated away. But here's the critical part. Timing matters. Not because you need to catch the exact bottom or sell at the exact top, but because the opportunity to accumulate physical silver at reasonable prices won't last forever. When the broader market wakes up to what's happening, when institutional money starts flowing in, when countries start competing for supply, prices are going to move fast. And at that point, the premiums on physical metal are going to explode, availability is going to disappear, and the opportunity to position yourself will have passed. Think about the people who understood what was happening in the late 70s and bought silver at $5 or $6. They watched it go to 50. Think about the people who bought in 2009 and 2010 when silver was in the teens. They watched it nearly triple. The common thread, they understood the fundamentals. They saw what was coming, and they positioned themselves before the crowd figured it out. That's where we are right now. The fundamentals are screaming that something big is building in the silver market. The smart money is accumulating, the institutions are starting to pay attention, the countries are stockpiling, but the average investor is still asleep. They're still focused on stocks, on crypto, on whatever the latest trend is. They're missing what could be the opportunity of a decade. Let me be clear about something. I'm not telling you to bet the farm on silver. I'm not telling you to go all in and ignore everything else. What I'm telling you is that if you're not paying attention to what's happening in the silver market right now, you're missing something important, something that could have a significant impact on your financial future. For those of you who've watched this far, I want to make sure you have all the information you need. That free guide I mentioned earlier, the one in the description, it goes into much more detail about all of this. And here's something special. If you're an American retiree with at least $100,000 in any retirement account, and you mention that you watched this video, you'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just education about how to protect your wealth in these uncertain times. This is only available to people who watch all the way through, so if that's you, make sure you check out that guide and mention this video. The bottom line is this. We're living through a historic moment in the precious metals market. The forces that are driving silver higher are not temporary. They're not going away. They're structural changes in the global economy that are going to play out over years, possibly decades, and the people who understand this and position themselves accordingly are going to be very glad they did. Silver is not just a trade. It's not just a speculation. It's a strategic asset that's becoming increasingly critical to the modern world. It's a store of value that's protected wealth for thousands of years. And it's an opportunity that's staring us in the face right now, waiting for those who are paying attention to take action. So if you're stacking silver, keep stacking. If you're not, maybe it's time to start paying attention. Because what's happening in this market right now is something you're going to want to tell your grandchildren about. The question is, are you going to tell them about the opportunity you seized or the opportunity you missed?